After being closed for a year, Walt Disney, DIS, has finally announced a reopening date for its Disneyland and California Adventure theme parks. Disney stock has also rebounded to new highs after coming back more than 140% from its March 2020 coronavirus crash lows. It's been a wild ride on Wall Street the past year as the stock market fell into a bear amid the coronavirus crash. In this video, we will tell you why Disney stock will skyrocket from now. Number 7. Disney stock. The stock is flying high on news that Disneyland is cleared to reopen as soon as April 1st, 2021. With theme parks on the verge of returning to normal operations and Disney streaming services adding subscribers at a fast clip, investors have started to value one of the most iconic consumer brands in the world, like a growth stock. Shares closed down at 0.5%. at $185.92 on the stock market today. DIS stock hit an all-time high of $203.02 on March 8th when news of the park's reopening first emerged. Disney stock is extended from a buy point of $183.50 from a flat base, according to MarketSmith chart analysis. Disney stock's relative strength line is trending upward again after a dip earlier this month. DIS stock's RS rating is 71 out of a possible 99. Streaming rival Netflix, NFLX, edged up 1%. Among other theme park stocks, Six Flags Entertainment, 6, eased 0.5%, and SeaWorld Entertainment, SEAS, lost 1%. Meanwhile, the company also said earlier its much-anticipated Marvel Studios movie, Black Widow, will be in theaters and on Disney Plus Premium Access on July 9th. Disney plans to add rides to its California parks as an upgrade and renovate the 490-acre Anaheim resort with new shops and restaurants as well. Disney stock gave up gains. No new theme park is in the works. Instead, the plan, dubbed Disneyland Forever, envisions new attractions, shops, and eateries in undeveloped areas of the existing resort. Disney officials said it is too early in the process to share construction costs. It expects to submit development plans for approval to the Anaheim City Council by 2023. Number 6. Shift for Dow Jones Disney stock. And its quarterly results showed from those ill effects. But now it's looking forward as COVID-19 cases slow down and countries rush to administer vaccines. In fact, travel-related stocks have rallied recently amid hopes restrictions will soon ease. Though Walt Disney World, Shanghai Disneyland, and Hong Kong Disneyland are open, Paris Disneyland and Disney's California theme parks and resort hotel remain closed. Paris Disneyland, recently set to reopen April 2nd, has decided to delay amid coronavirus concerns. On March 17th, Disney CEO Bob Chapek told CNBC that the two California parks will reopen April 30th. They will initially have 15% capacity and be restricted to California residents. The company expects the majority of park attractions will be available at reopening as they work through details with theme park guidance from the state of California. To accommodate physical distancing, parades and nighttime spectaculars will return at a later date, Disney added. While its theme park business has taken a hit, Disney in February reported quarterly earnings and sales that beat Wall Street targets. Its Disney Plus streaming service has been a huge success. In November, Disney Plus made Nielsen's top 10 list of streaming titles for the first time ever, as the second season of its hit series, The Mandalorian, kicked off on October 30th. Earlier this month, Disney Plus wrapped up WandaVision, a new TV series based on Marvel characters Wanda, Scarlet Witch, and Vision. The show also made Nielsen's top 10. Number 5. Good news for Disney Plus fans. At its December 10th Investor Day, Disney said Disney Plus subscribers were at 86.8 million as of December 2nd. That's up from 73.7 million in early October and 60.5 million in early August. Including Disney Plus, Hotstar, Hulu, and ESPN Plus, the company's streaming services have more than 137 million subscribers. This year, Disney Plus will expand to Eastern Europe, South Korea, Hong Kong, and other markets. The company now expects to have 230 million to 260 million Disney Plus subscribers by 2024, up from its prior estimate of 60 million to 90 million for the same time frame, with global subscriptions across all services reaching 300 million to 350 million. Netflix, by comparison, has 195.15 million subscribers. Disney plans to roll out a new Star-branded streaming service internationally this year, capping content for ABC Studios, Fox Television, FX, Freeform, 20th Century Studios, Searchlight, and other Disney-owned assets. Number 4. New CEO takes the helm. Chapnick, chairman of Disney Parks, Experiences and Products, was named new chief executive after Bob Iger stepped down in February 2020. At the same time, Iger said he would stay on until the end of 2021 as executive chairman and direct Disney's creative endeavors. Under Iger's 14-year plus tenure, Disney stock soared more than 400%, or about 12% annualized. He revamped the theme parks, brought Star Wars, Marvel, and Pixar into Disney's movie universe, and launched Disney Plus. Walt Disney shares have doubled in value since the end of March 2020, when investor fear over the COVID-19 pandemic was at its peak. Those gains came despite Disney losing $2.8 billion in fiscal 2020, with its theme parks operating at limited capacity. But investors shouldn't feel like they have missed the boat. As Disney CEO Bob Chapek recently stated at the Morgan Stanley Technology, Media, and Telecom Conference, the company hasn't yet had the benefit of seeing both its streaming and park businesses operating at full throttle at the same time. Well, that moment is about to come, Chapek said. Once the theme parks fully recover, the operational improvements Disney has made during the downtime could make the parks more profitable, which could fuel the stock to new highs. Disney is already using technology to deliver immersive experiences, but management wants to do more. A good example is the Star Wars Rise of the Resistance ride at Disney's Hollywood Studios theme park. Number 3. Disney Plus continues to grow. After the close February 11th, Disney reported earnings per share of 32 cents on revenue of $16.25 billion. Analysts expected a 45-cent loss on $15.8 billion in sales, according to Zacks Investment Research. Parks revenue sank 53% to $3.59 billion, but direct-to-consumer revenues, which include Disney Plus and other streaming services, jumped 73% to $3.50 billion. Disney Plus subscribers jumped 9% to 94.9 million as of January 2nd, up from 86.8 million on December 2nd and 258% from a year ago. In March, monthly fees will increase by $1 to $7.99 in the U.S. and by €2 to €8.99 a month in Europe, which will likely boost revenue. ESPN Plus subscribers are up 83% on the year to 12.1 million. Hulu is up 30% to 39.4 million. Number 2. Disney stock fundamentals and earnings. According to Schaefer's Investment Research, DIS shares are up 70% year over year. Disney stock previously hit its record high February 24th. IBD Stock Checkup assigns Disney a 32 composite rating, which combines key fundamentals and technical metrics in a single score. The media giant ranks 14th in the 26 stock Media Diversified group based on that rating. A 13 earnings per share rating reflects a 5-year earnings growth rate of negative 16%, which includes a flat result in fiscal 2017, a 19% decline in fiscal 2019, and a 65% drop in fiscal 2020. Analysts now expect EPS to fall 5% in the current fiscal year ending in September, followed by a 154% jump in fiscal 2021, according to FactSet. Clearly, some of the future growth of Disney's streaming services has already been discounted into the company's valuation, but Citigroup analyst Jason Bazinet recently reiterated a buy rating on Disney stock with a $205 target price, which is 16% above Disney's current share price of $176. Bazinet believes Disney's focus on quality over quantity and bundled plans that combined all three of Disney's services at a competitive price will continue to drive faster subscriber growth than Netflix over the next few years. Disney has the advantage of mining its character-rich franchises for years for new ideas. A franchise like Star Wars provides a long runway of new movies and original series to keep subscriber churn low and attract new members. That's why Disney remains a top streaming stock to consider adding to your portfolio. Number 1. Is Disneystock a buy? There have been signs of reopening of the economy and lifting of lockdowns, which led to a surge in the stock price. The successful vaccine rollout has also led to expectations of faster demand revival, with theatrical releases and reopening of theme parks likely to get back on track soon in the coming months. After breaking out from a flat base and rising to record highs in November 2019, Disney stock tumbled more than 40% during the coronavirus market crash. It found a bottom on March 18th, but has made its way back near its peak. On February 8th, Disney led the Dow Jones Industrial Average with a 4.9% jump to a new high. Shares cleared a $183.50 buy point of a 5-week flat base and volume 38% higher than usual, according to MarketSmith chart analysis. Disney stock advanced nearly 11% from the entry, but it has since pulled back into potential buy zone, which tops out at $192.68. So it is in buy range right now. The relative strength line is near its highest level in years, meaning Disney stock is outperforming the overall S&P 500 index. Do let us know in the comment what are your thoughts for reopening and future of this pandemic. Please subscribe to the Stock Advisor. Thanks for watching.